Do you know the 5 costs when it comes to purchasing a home, or are you unsure about the many options when it comes to down payments? If so, then stay tuned so none of these expenses are going to catch you off guard when it comes to purchasing your home. And at the end of this video, we're going to discuss options if coming up with money for these expenses are the biggest barrier between you and home ownership. Hi there, for those of you that don't know me, my name is Jon Hill. I'm a realtor here in Anchorage and I help home buyers and sellers just like yourself in the Anchorage and Matsu area. So what are the 5 expenses when it comes to buying a home? They are earnest money, inspection, appraisal, closing costs, and down payment. Now it's important to note that in some instances, sellers are willing to cover some of these costs for buyers in order to help get their property sold. However, that's not always the case, and if you're able to cover all these expenses for yourself, then that will allow you to submit stronger offers, which increases the chance of you getting into that home that you absolutely love. The first of the 5 expenses is earnest money. Earnest money is submitted with the offer to purchase a home to show the seller that you're a serious buyer and you have skin in the game. The earnest money is typically 1% of the purchase price. So if you're buying a $500,000 home, the earnest money is going to be $5,000. Your earnest money is held in your realtor's brokerage's account. So I'm brokered by EXP, so my buyer client's earnest money is held in EXP brokerage's account until it is released the day of closing. On closing day, the earnest money typically goes towards the buyer's closing costs or down payment. So while it is submitted at the beginning with your offer, once you close on the property, it goes towards other expenses. Now, there are some scenarios when earnest money can get returned to you. For instance, if something is found during the inspection period on the property, or if a cloud is found on the title, or if something happens with your lender and the financing falls through, those are all instances when the earnest money can get returned to you. Real quick, 3 big things with earnest money is it's typically 1% of the purchase price. It shows the seller you're serious about buying the home. And on closing day, the earnest money goes towards closing costs or down payment. Moving on to cost number 2, the inspection. After your offer is accepted by the sellers, you move into the due diligence period of the contract. During this time, buyers will hire an inspector to go and inspect the property for them. The inspector is looking for any defects in the property. Now, it's important to note that every property comes with its own unique defects, and sellers typically don't fix everything found during an inspection. But what we want to make sure during the inspection period is any large costly items or any problems the seller fixes and ultimately the property is in a condition you're satisfied with when you take ownership. Cost number 3, the appraisal. Your lender is going to require that we get an appraisal. If you're paying cash for the property, an appraisal is your choice, but lenders require an appraisal because they don't want to lend more money on a property than the property is worth. So they are going to send out a third-party unbiased appraiser to give them their opinion of the value of the property. An appraisal is typically around $900. In Alaska, it's most common for the buyer to upfront the appraisal fee and then for the seller to reimburse them at closing. The reason for this is the seller doesn't want to pay for an appraisal just for the buyer to back out for whatever reason. So they like to see that buyers are upfronting the appraisal fee to show them that they're serious. In my experience, more often than not, when you ask the seller to upfront the appraisal fee, they counter back asking the buyer to upfront it, which then gives time for other buyers to come in and also make offers on the property. So I recommend buyers upfronting the appraisal fee, making a strong offer so you can get the property under contract and lock the property up. And because most sellers in our market are willing to then reimburse you for the expense at closing, it doesn't actually cost you anything, but shows the seller that you are much more serious about buying the property. I recommend paying for the appraisal after the inspection period and repairs have been agreed upon, because at that point you've had the property checked out, you've determined that you do indeed want to buy it, but you don't want to pay for it before that time period in case something did show up on the inspection. So pay for the appraisal after that period. And now moving on to cost number 4. At this point, we're all the way to closing day. Congratulations, and with closing day comes closing costs, our 4th expense. Closing costs encompasses a lot of different expenses. They may be reserves, prepaids, document prep fees, recording fees, lender fees, a lot of different expenses. I like to tell buyers to anticipate closing costs to be around 3% of the purchase price. Now, oftentimes they are slightly lower than that, but I like to be on the safe side, and so I use 3%. So if you're buying a $500,000 home, 3% would be $15,000. And now for the 5th and final cost, which is your down payment. A lot of people aren't aware that there are many different options when it comes to a down payment, and I'm going to briefly cover the 4 most common that I see. The most common one that I see is a 3.5% FHA loan. So 3.5% on a $500,000 property is $17,500. The second most common down payment amount I see is a 5% down payment with a conventional loan. So on $500,000 property, 5% is going to be $25,000. Now the third most common down payment amount I see is actually 0%, typically with a VA or a rural development loan. Now 0% is going to be $0. Now not to be confused, you're still going to have all the other expenses we already went over, but with a 0% down payment, your down payment is going to be $0. The fourth most common down payment amount I see is 20%. This is typically for investors or buyers with large savings. The advantage of putting 20% down is it eliminates private mortgage insurance, which can save homeowners hundreds of dollars a month on their payments. Okay, now let's briefly break down these expenses in writing so that you're able to see them using a $500,000 purchase price example. For earnest money, we have 1% at $5,000, but as discussed, this will go towards closing costs and our down payment. We have a $600 inspection. We have a $900 appraisal, which will get reimbursed to us by the seller at closing, and that money can also go towards closing costs and down payment. We have 3% in closing costs at $15,000, and we're using the most common down payment amount of 3.5% or $17,500, bringing the total amount to purchase the home to $33,100. So now if you're thinking, whoa, John, that's a lot of money. Well, as discussed at the beginning of the video, let's talk about what we can do if coming up with the money for these expenses are the biggest hurdle standing between you and home ownership. Now, if you're still able to qualify for a loan, the ability to make payments, then there's actions we can take to drastically lower the expense that it takes to get into a home. Here are the same expenses for the same $500,000 home, but notice in this scenario, some of the expenses are being paid for by the seller. Now, most of the time, sellers are still going to want buyers to submit earnest money at 1%, so we still have the $5,000 of earnest money. And most of the time, the buyer is also going to have to pay for the inspection of $600. Notice the appraisal is being paid for by the seller, and the seller is covering the closing costs for the buyer, bringing both of those amounts to zero. Down payment does need to be covered by the buyer at 3.5%, that is still $17,500. When we apply the $5,000 of earnest money to the down payment and add the $600 inspection, you can see we are now getting into the home for $18,100. So there are scenarios in which a buyer can get into a property basically for just the inspection and the down payments. So if you're doing a 0% down payment, I have helped buyers get into properties at no expense to them except for the inspection. However, if you're able to cover all these expenses yourself, as discussed, you're able to submit much stronger offers. Getting some of these expenses covered by the seller comes down to current market conditions, the specific property, and the seller's motivation. All of these are things that a realtor like myself can help advise you in structuring your offer so that you are able to get into the property in the best case scenario for yourself. So those are the 5 expenses you should anticipate when you're buying a home. As always, if you have any questions or if I can be of help with anything else real estate related, do not hesitate to reach out. This is Jon Hill, Alaska Realtor, and I'm here for you.